Okay.
Okay. In this picture, you traded the buy. Okay.
Yes, sir.
And so is there any background noise from your side? Kindly tell them they don't speak. You are in a class. Okay, he's not there right now. Okay, so Satish or Deepali, do you have any query?
Sir, I have query, but not related to trading, related
Yes.
to some concept.
Okay. Ask first.
Okay, sir, first of all, when should we trade, like Monday to Friday or on OTC also?
You can trade the OTC market, and also from Monday to Friday in the Cortex market, you will find mostly OTC market. Very few hours you will find the real market. So
I
OTC market.
I'm I'm planning to trade in IQ option.
Okay. So in IQ option from Monday to Friday, you will find the real market, and Saturday and Sunday OTC market. So IQ option OTC market, I'm not suggesting you need to skip these 2 days. Maybe you have another
Okay, so
work.
I can
Yes.
do
Yes.
OTC for on Cortex.
OTC and Cortex, because the IQ option OTC market is too risky. Why? Because the candlestick opening gaps and the gaps theory also will not work in OTC market in the IQ option. That theory which we are using in a real market, that theory will not work in OTC market, right? So there is no concept of the gap in the OTC market. And another thing that in OTC market you will find jumps, and while you will open the trade, your trade will not take place at where you are opening the trade. And 1 minute trading is
Okay.
very risky. But for example, if you are unable to arrange the time for trading in a Monday to Friday time, so if you want to trade even in the IQ option, OTC market, then use any 5 minute strategy in OTC market. That will be fit.
Okay, so it is better to go for Monday to Friday because I have time.
Yes, yes. Then Monday to Friday it will be
Oh,
good, because you then the Saturday and Sunday you just keep that time for study or repetition. You are of any concept or extra study, or you are just observing your losses. Why happened from Monday to Friday, or any research or other your
okay,
personal
sir.
works like that, right?
Okay. One more question. Like
Yes.
we have read too many strategies as of now.
Mm-hmm.
I have gone through your Hindi videos also and
Mm-hmm.
these videos also.
Mm-hmm.
And one question, like how should I start doing the trade? Because I
Yes.
go with one
Yes.
strategy or I should go with multiple strategy at a
Okay.
time.
Okay. 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 That is a very good question. Look, every trader, when he is trading, first of all, he will focus what he know better than all others, right? So there are too many strategies which we have learned, or you which learned outside from this course, from only then the YouTube. What I'm thinking that if we write down the list of the strategies, 10 strategies, 12 strategies, or 15 strategies, whatever, right? If I ask what will be the common filter for these 10 to 15 strategies, everybody will tell that the support and resistance is the common filter of all the strategies, right? So what I'm telling that the support and resistance strategy must be your master strategy, and all other strategies must be your helping strategies. Means when you are opening the chart in the start, what you are looking for? Support and resistance trading. In that observation, if you find a pattern, read that one. If you find a breakout, read that one. If you find any other strategy, sequence, reference sequence, psychological pattern, or whatever, or breakouts, fake breakouts, you just trade. Means all other strategies are your helping strategies. But while you are focusing on the market, the main strategy is your what? This identify the support and resistance, take the reversals on the support and resistance, using the support become resistance technique, resistance becomes support, or support becomes resistance technique, and trend line, reversal techniques, supply and demand technique, because all these, mostly your 40 to 50% course related with the support and resistance. So your master strategy will be what? Support and resistance. Okay, and then all other strategies will be your helping strategies. As much as more possibilities, you will get more good results. Why? Because, for example, if you are just following the patterns trading, sometimes the patterns are not forming very well. Then you will wait. Too much wait, finding any opportunity, it will create emotions, or it will make you impatient in the trading. Impatience will be the cause you will lose money, or you will invest too much money because you passed too much time, but there was no any opportunity. That's why you have a limited time. You want to achieve the goal. So any weak opportunity also you will take. So if more opportunities you will add in your trading, then your chances of impatience will be very less. Means chances of putting into emotions or drop into the emotions will be very less, and you can achieve easily the targets. So what will be your main strategy? Support and resistance. All types of support and resistance. Along with the support and resistance, if any strategy you will find, you can trade, because all the other strategies, the basic and advanced filter of those strategies are what? The support and resistance. So why we cannot make support and resistance strategy as a master strategy for trading? The rules of breakout, the rules of reversing on the SNR, and when the sellers are biased, unable to break any level and move it in another direction, in opposite direction, what will happen? That all these points which we learn, you just use in your trading. And this is not just for Dipali, it is for all members, that your master strategy will be support and resistance strategy, right?
Sir, I have one more question.
Yes.
Sir, sometimes you consider doji as a red candle, sometimes you consider doji as a green candle, which I don't understand.
The doji is the indecision candle. It is not green, or even it is not red. Doji in the IQ option you will find in the shape of silver color, right? So that is a pure doji. But for example, if the color is green and red, that will be not called as a doji. It is a very weak candle. So if you are following the doji silver color candle in IQ option, that is a doji which shows the indecision. Now that indecision is maybe from the buyer side, maybe from the seller side. You need to recognize that this doji, where from it. How we can recognize the doji? Look at there are two ways to understand. There's a green candle and a green candle, and that is a resistance level, right? So this is the gap between the resistance level and closing price of the green candle. So what we are expecting here, who will fill this gap? Definitely everybody will think that the next candlestick will be green. But if the buyers are telling we are unable to go up, we want to stop here. We don't want to move up. So at that point, the candle will be formed which will be related to any type of doji. So now who gave the information that we are not ready to go up? Bias gave you the information. So this doji appears means that this indecision is where from? The bias. So that indecision information from the bias goes to the sellers. So otherwise sellers are telling that we will enter from the resistance level. In case if you find information from the buyer side in the shape of doji, now the sellers will be ready to enter in the market. So here the price will come from the seller side, right? So this is the doji giving the information from the buyer side. So for example, here, that is a support. So if there is a support away from the closing price of the seller's candle. So who wants to continue? Sellers needs to continue, right? But if sellers say that no, we are not ready to go down, and they decide the market, they time what the candle form, doji form. So this information goes to the buyers that sellers are not ready to continue in the market. So after that information, buyers will be again ready, and then they will continue to move the next resistance level. Maybe the sellers will come from this level again, or maybe the buyers will break this level. So now that there are two ways. If the price is away from the resistance level and doji appear, means that doji comes from the buyer side, and that doji comes from the seller side. You need to recognize it and then go with the market. The another use of the doji have a wick. The doji wick is acting as a support and resistance. So are you using this wick as a support and resistance for next time? This wick as a support and resistance for next time? This is support and resistance for next time. This is support and resistance for next time. If you are using these wicks as a SNR, it's up to you. If you are using the information who in decide the mark to not create the candle, it's up to you. Right? Understood?
Sir, yes. Sir, actually, when we were doing reference trading, there you were counting like four green candles are coming, then one red candle, one doji is coming, then you were counting it as a sailor's candle,
Yes,
something like that.
yes. For example, in the previous example which I gave in the sequence of the market, as there was a 2 or 3 red candles, and then I found one doji, and I told that time that the doji is I'm counting that this is a continuation of sellers. So I'm counting that all these are the sellers candle, right? But doji why come? Because the support was here, right? Who need to enter here? For example, the support is here, right? Who need to enter on the support? Buyers need to enter, right?
Buyers, but they don't want to come.
They don't want to continue. So I'm telling that this is a complete sequence of the sellers. So we can count as a green. Or if you are confused in the doji, that you can ignore that series. Maybe if you are confused, okay, you can ignore that series and find the complete series and then enter the trade.
Okay.
Okay. Yes,
Thank you, sir.
Sairam, now you are okay.
Yes, sir. Yes, sir. I'm available. And
Okay. Okay, let's talk on your queries. So what's the why you bought here? And the candle is a seller's candle. What you thought that the next candlestick will continue?
sir, your breakout stuff, I think it's a true breakout because sellers failed, sir.
Look at brother. Yes, you are right here that the sellers tried many times, but they failed. Right? Sellers tried
Yes, sir.
many times, they failed, and the buyers continued. Okay.
Yes.
Look at when you go to continue for any buyer's candle or any seller's candle, the candle and count the previous candle. How many candles are previous? Previous 5 candles count. See, the green
Okay.
candle is bigger than the previous 5 candle, right? So
Yes.
that is
So I
that's the exhaustion candle. Yes, exhaustion candle, and maybe this candle again buyers will continue, but from this open price again, right? Because it's the exhaustion. Why? Because the previous trend was uptrend,
uptrend.
and the sellers tried here to break this point, right?
Right.
And this is a double top chart pattern, and market may can go for retest, then the sellers will come down again. That is possibility. So if you want to continue the uptrend trade, you make sure that the price must break this area, and then after that, if you are getting any buy trade, then you can go. Means what you learned here, that if the price goes down and broken the first support, right?
Right,
So
sir.
you are not trading any buy trade within this area. It will be very risky. It will not work for you.
Okay.
If you
Okay.
want to continue to buy, then make sure the price must break the highest high and it retest and then it's moving up. You got any opportunity for the buy. It will be safe.
Okay.
Okay, here you bought again because you are looking that the sellers are failed, right?
Yes, sir. Yes.
No, sellers are not failed here. Sellers are not failed
No.
because any support and resistance, the first time they tested, yeah, it's a breakout. It's a
Breakout.
breakout, but it's not a strong breakout, right? And that
Yes,
was the
sir.
same picture. The previous you placed the trade, I think that was the same picture. They failed here again, buyers tried, and then again sellers entered. So it the same concept will be applied at the same area. That recently the trend is in a generation mode, in an establishment mode. Means the sellers was controlled, this buyers, okay, and this is a breakout of any trend line. Here the trend line is broken. And the broken of trend line, it is a sign the trend can be changed, but immediately the trend cannot be changed. It will create a consolidation, it will create a ranging market, then final market will move down. So this is the establishment of process. Even in the both mode, the sellers maybe can weak, the buyers maybe can weak. Okay. So for example, if you are going to sell, if you count the psychological pattern, 70% will give you the answer what I need to buy or why I need to go for sale. So the psychological pattern is what telling you at this area. Green, red,
Uh,
green. Next candlestick will be
Red.
red. And again, it's the establishment mode. So red, green, red. Then what will be the next candle?
Green.
Green. So
Up.
now you understood the sellers are failed. So after green, again I will find a green candle or red candle. If you find that the sellers unable to break this support, means the buyers will continue. But again, red and two green with the exhaustion candle, what will be the next candle? It will be the red candle.
Up.
So when you are observing the candles, if you are unable to understand that what will be the next candle, then get the help from the psychological patterns. It will give you the more help than all other concept, because 70% directly the trades are winning. So if we are just getting the idea that how many psychological patterns won in this area, it won this one, this is the one trade, 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 one trade, one trade, right? So many trades are won in the psychological area. It means that if you are taking the decision of buy, how many times psychological patterns give you the help? One time, two times, three times, four times, 5, 6, 7, 8, 9, 10. 10 times the prediction of the psychological pattern was very good. It means that if you are using the support and resistance and getting the help from the psychological pattern, means you will be in the favor. So if you are thinking to buy, you are thinking to go for sale after the new trend is establishing. So think what psychological patterns are telling you. Means psychological pattern is not a strategy, just the psychological pattern is a concept which can give you the idea of prediction, that if you are thinking go for buy, is it right or wrong, is for the psychological pattern, right?
Okay, sir. Sir, and open the last image, sir.
Okay. Yes.
Here, sir, uh, buyers tried, sir, but failed, and once red candle formed, and again buyers tried and break, sir. So can we break, last support, sir?
No, wait.
Can we take that
Wait,
support, sir?
wait.
La-
You are from where you are reading? At the end or in the past?
From the past, sir.
Past you are
Uh,
reading. Yeah.
so can we take that from bottom layer support, sir?
This one support?
Yes, sir.
Yes, why you cannot take? It is because it's a red and green, you can take as a support. And this will be also a support. This is also
Yeah.
support. Because if the support is created, we cannot ignore it. right?
Okay.
We can draw all the SNR levels, we can draw, right?
Yes, sir.
Okay. Any other member who have query? Okay. So let's complete the other topics. So now the trading plan. The trading plan is very important in our trading because if our mindset is not clear, why we are here, how much the target we need to achieve, and what time required for the trading, how much target in how much time we need to achieve. So if that is not planned, then maybe we will not get success because if we want to reach to the destination, the plan must be there. Look at this plan. If you follow like this plan, it's up to you. If you want to create your own plan, it's up to you. I'm suggesting that every trader must plan that I'm trading for minimum 1 year, and my 1 year target is that target. So there is no restriction how much target you can select. 1 leg, 2 leg, 3 leg, 5 leg, 10 leg, 20 leg, whatever the target. If you want to select, it's up to you. But make sure that in the trading, what the target you are selecting, we require in the investment 10% of your selected target. Now you look, if you want to select the 5 lakh rupees goal in 1 year, that 10% of the 5 lakh will be the 50,000. How much you can invest easily? A money which is yours, not you are borrowed from any other person. US money. Are you able to invest 50,000 rupees in the trading? If yes, your target will be 5 lakh. But for example, if you are selecting the target 10 lakh rupees, and then you are thinking that no, I have not 1 lakh rupees for the trading. I have only 10,000 rupees for the trading. So then your target is wrong. If you have a 10,000 rupees, your target will be how much? 1 lakh. Maybe you will achieve within the 3 to 4 months or 5 months, but your target is very small as per the investment. So if this is very normal target, 5 lakh rupees, you need how much percentage? 10% of the 5 lakh, 50,000 required for your trading. Okay, so 5 lakh rupees if your target, then monthly target will be 41,000 something. And your daily target will be 1893. So 1893 is what? It's your daily target for 22 days. I'm not counting the OTC market. If you are trading, your day will be count. But 22 days, I'm just taken from the month. And 1893 is our daily target. This 1893 is a profit target or it is a loss target. If you achieve the 1893, you stop the trading. If you in a loss and you reach to the 1893, then it is your stop of the day. You need to stop your trading. Don't go lose more amount. So, and when we are come to on the investment, 50,000 you have an investment, 30,000 you will keep in your bank account where easily you can deposit in any time. For example, if you require, maybe you are in a loss, your amount is 0 and you want to recover or complete the goal, so you require more amount, you must have in a backup. If you don't have a backup, then your trading will be very risky. So backup is very important. And then 20,000 you need to deposit. 20,000 when you will deposit, then you need to work on the monthly target on daily basis. So first month, here you will find 1 month to 12 month, all sheets are available. Go to the first month, only 5 seconds it will take. Just every day you need to add that today on the first day of trading, 1900 I have achieved. You just to put 1900 here. And on the next day, maybe you lost the 2,000 rupees. and then you again achieve the 1500, 1800, 20, forever. For example, if you on the 11th day you didn't trade it, 11, 12, 13 you didn't trade it, again 18, 19 and 20 you didn't trade it, but these days you traded and achieved the target like that way. Total target from the 41,000 something, you achieved the 2400, 24,000 something you achieved. But there is a remaining target, 1740, 466. So what we will do, we are not doing anything. Automatically, all the formulas will work for you, but I'm just giving you the idea that how it is working. This amount will be divided into the previous 11 months, as your pressure in trading must be less, not increase the pressure. For example, someone is thinking that if in the first month I achieve the 24,000, now the 17,000 will be added to the next month. No, it will be not added to the next month. It will be added, it will be first divided and then added to the previous 11 months. So 1500 will be added to every month. Like before your target was how much? 41,000 something. And now, because you have a remaining target, that this remaining target 1500 will be added in the second month, and all 1500 for 15 days something will be added on all these months. Means your pressure will be released. So the next month you have a 43,000. Every day when you stop the trading, you just come and add how much you have a target. Mostly the sheet is formula based. All the calculations will be done by own self. So you just to put the amount, enter the amount in the achieved target as per the day. Then your plan will be carried on and it will be followed. So if, for example, if you are thinking, no, I need another plan, I'm interested with another plan, you can create, but you must need a plan in trading. So when we are achieving the plan, we require the money management. Now, mostly traders are interested to trade in a martingale money management or in a compound system. But for example, if you are a beginner trader and if you are selecting these both money management like a martingale and compounding money management, so this is a pro trader money management system. You are a beginner, means you pick the money management but wrong, means that money management is not effective for you. So the money management which you will use, that will be this one money management, which we already discussed here. In the first month, you will use the 1% of your amount. For example, if you invested the 20,000 rupees, the first month you are trading with a 1%. All the lines will be used only just a 1% of your 20,000. As per the 1%, your amount will be like that. When 1 month completed, now you are thinking that in the 1 month, how many trades you will place? It's up to you. If you are placing 30 trades every day, then these 30 sessions will be, 22 sessions will be in a 1 month. In the beginning, first month. In the second month, you can go with a 2%. In the third month, you can go with a 3%. Finally, when you are thinking that I'm good now in a trading and I have more than 80% or 80% winning ratio, so you can go with the 5%. So this is base money management, which cannot give you more losses or your account can become zero. No, this money management will save you mostly. But for example, if you are not agree with this money management because the growth of account will be very less as compared to our targets, so what we can do? We have a simple compound money management, which I'm suggesting to you. For example, as a person who have a $20 in account. So this is very important. But after practice, too much practice, then you are going to follow this one, a compound money management system, right? Compound system. So this compound system, or we can call it anti-martingale. But this anti-martingale and this compound money management system we are using for one step. One step compound. One step compound. Okay. How? You invested the first trade with the amount of $1. So here just I'm going to add something. Number of trade, right? Invest amount, return. Look at here. So the number is 1, means the first trade you have added. When you will earn this amount that you got the, for example, 80 cents, right? This 80 cents you got. Let's see. Then your second step, so the first step, first trade you have traded the $1. This is your investment. Now on the second trade, you are investing how much? $1 plus profit. How much profit was that? That was $1.80, right? This is 80 cents. So how much you invested again? 1.80. For example, 1.80 is this one. How much you will get the return? You will get the return at $1.40. So what will be the result? The result is that you invested $1, you got the 80 cents. And then one time investment plus profit, again you invested, you got 1.40. So your total amount will be how much now? Your total amount will be 1 plus 40 and previous amount 1.80, right? So it will be total $3.20. On the one step, you have an investment amount of $1 from your account. So let minus the $1. The total profit is how much? Is 2.20. With the one step of anti-martingale, always when you are consecutively winning the trade, so you are getting the $2.20 profit every time. For example, this type of practice, this is a overall one. This is the complete process of one step complete process. This is the one step complete process. First trade you invested, you earn 80 cents. Now $1, this $1 and this 80 cents you are investing together and you earned 140, means 180 plus 140, that becomes $320. This was your previous investment. That was your investment, right? You minus from the profit, that your total profit is how much? $2.20. This is called the anti-martingale. Now, how much step you can continue? Mostly traders going 5 step. But I'm suggesting you in this stage, you can go for the first step compound. Only first step compound. Now, what will be the result in case if you have a $10 in account? How much? $10 investment. Then how much will be opportunities to go with the one step compounding? Means you have a 10 opportunities, right? If you lost all the 10 opportunities, means you have a $10 loss. In case if you lost 5 trades, 5 opportunities and 5. So now you have a total how much investment? $10 investment, in which you lost the 5 opportunities, means you have a total loss how much? $5, right? This is the total loss $5. 5. And also you won the 5 opportunities. Each opportunity is giving you $2.20. And this investment amount we are also deducting. Means total won 5 trades into 2.20 means it will be $11, right? It's 11. And your investment is also how much? $5. Because $5 goes lost because 5 opportunities we lost here. Total, so 5, that your final amount will be what? How much? Your final amount will be $16. So you are invested $10. Your final amount is how much? $16. So if 2 trades consecutively you are winning out of 10 opportunities and 5 opportunities you completed, 5 opportunities you lost, that you will win a profit. So this is an anti-martingale. This is how much, what, this is what? It's an anti-martingale. Let's see, talk on the martingale. For example, if we are talking the martingale, in the martingale light, if you are investing $1, you lost, how much you will invest? $2. If you lost, how much you have investing? $4. So total, how much it become? $6 and $7. How much you remain? $3 you remain. For example, if we go for the 4th step, how much required? It required $8, but you don't have 8 because you have a 3. We will be not successful in it. But if anti-martingale we are going, and compound system is anti-martingale, right? Anti-martingale, if you'll go, it will be good, but not now. When you observe yourself, when you understood yourself that how much winning percentage you have with the debt money management, which we are discussed here. This money management. First, you need to observe yourself for the 1 month minimum on the 1%. Your winning percentage will be out. Then how many times, 2 times, 3 times, or how many times you won. For example, if this is your same winning ratio, 1 time anti-martingale you won, another time anti-martingale you won, again you won, again you won, again you won, again you won. So 6 times if you won the anti-martingale, it means you are good. You are winning too much. In the anti-martingale system, if your winning ratio is 50 times, you will be profitable. So which is better? Just tell me. Anti-martingale is better or martingale is better?
Anti-martingale.
Anti-martingale.
Because
Anti-martingale.
1 step is good. I think that all of you, you can afford the 1 step compounding, right? 2 step, 3 step will be risky, but 1 step will be not risky. 2 trades, mostly you are winning together. But when you are investing the amount of profit, when you are winning the first trade, means this anti-martingale system, we can start with a $10. We're going to start with the $30. We're going to start with the $50. So less, if you have a less investment, that you can invest like that. But keep in mind that IQ option is offering the amount in a sense. But CHoCH is not offering the amount in a sense. So you will face these points. Means you must be, if you are using the anti-martingale in the CHoCH, your account must be in a INR, right? Because you can use the amount, whatever you can want. Because the amount will be traded in a rupees. But in a dollars is expensive. So in the sense, we cannot use in a CHoCH. So if you are using the anti-martingale system, you can go with the CHoCH with an INR account. But if you are using the IQ option, then no issue. Then cents you can use in a dollars as well as. And I'm thinking this is the best, but after practice, after evaluating yourself, then not immediately. and only one step. If you are thinking, no, I'm a good, very good in a one step, but now I want to try the two step, then you maybe you will feel the fear of losing trade, and you fall into the emotion and lose the money, and you unable to achieve the goals. It is possible. Okay. And in the anti-martingale step, whatever the strategy you are using doesn't mean that you can again start the another money management. So within that money management, all the opportunities, if you are trading, you can go with it. So I'm thinking that is best. Okay. Is there any query on it?
No, sir. Sir, when should we withdraw the amount?
For example, you are trading every week and achieving the goal. You invested the $50 or $100, and when 20% you earned, you 20% withdraw 20% of your investment, right? For example, $100 you invested and you earned the $20, you can withdraw. You keep the $100 all the time. Slowly. For example, if you're thinking, no, I every $50 I want to withdraw, but don't keep all the money, because sometimes it is possible we can fall into the emotion. That time investment plus profit amount will be in a loss. So it is better that if we are earning $20, we withdraw again $20 withdrawn. Now our investment is how much? $60, but the another $40 was a profit. So whatever you invested amount, first of all, try to withdraw all your invested amount. Now you are trading on a profit. Your emotion will be released. And on the profit amount, you can take more risk. For example, here, as I told you that $1 as opportunity for one step continuation, and now you have all profit amount, so you start with the $2. Your profit will be double, right? Like that. So we have
Okay, sir. Thank you.
yes, we have completed all the topics here. Now I'm giving the 2 weeks minimum for all of you that you go practice and identify, is there any other confusion which you are facing again and again? For example, if you're trading on any strategy which giving you losses too many, or you are unable to understand why I'm getting the losses, or why market is not working for me, I'm confused still, whatever. So after 2 weeks, I will give you one more class for any doubt clearing, right? If it is required. Otherwise, if there is any query, you can ask me in the group or personally. I will solve the query, inshallah. Okay. Thank you so much, brothers and
Sir,
sisters.
I have one more question.
Okay, ask.
Suppose we do trading 30 trades every day. So till when we should follow that strategy?
It is up to you. If you have a time, you can go for 30 trades. If you don't have a time,
No, this is not my question. My question is like, suppose I'm winning 20 plus 25. So can I increase the amount, or I should be stick to $1 only, 1% only?
So yes, I told that minimum 1 month go for evaluating yourself. After 1 month, you will understand yourself that how much you have a winning ratio, how much you have a percentage of winning. As per your result, you can increase the percentage. You can go with a 2, 3, or 4% or 5%. If you have confidence, go for more. If you are thinking that no, I'm not still in the process of confidence, it is building still, then slowly increase the amount, but not more than 5%. First month
Okay, sir.
completely go with the 1%, because anytime your emotion can be hit. Anytime, right?
Okay.
Okay.
Sir, can you share the Excel
Thank you,
sheet, sir?
sir.
Yes, all these Excel sheets I will share with you. Yes. Okay.
Thank you, sir.
Thank you so much. Allah Hafiz.
Thank you, sir.
Thank you.